Hey everybody, welcome to the morning market briefing. It's Monday, February 2nd, 2026. It is Groundhog Day. Some breaking news. If you are a longtime viewer of the show on YouTube or listener to the podcast, you know that the most accurate Groundhog Day prediction comes from a groundhog here in Georgia, not Punxsutawney Phil, but General Beauregard Lee. He has officially, as of 7:57 a.m. this morning, local time, he has predicted 6 more weeks of winter. So
it is a beautiful sunny day, so lots of shadows being seen.
Yeah, it's if you're worn out from the winter storms of the past 2 weekends, bad news. We got 6 more weeks of this coming through. So there you go. Ben, as we tee up the week, what's top of mind? Because I feel like I was actually on someone else's call on Friday, and it's in some ways the market didn't really move a whole lot last week. At the same time as we had earnings coming through, we had the Warsh appointment, headlines with gold and other commodities. As you're kind of teeing up the week from just a narrative standpoint, what's top of mind for you?
I mean, I think it comes down to the roundabout that people are doing on Warsh. I mean, I feel like it's just the merry-go-round. At one point, people saying that he's going to be incredibly dovish and do exactly what Trump wants and cut interest rates and print money. And then on the other hand, saying this is a guy who doesn't believe in QE. He wants to take us back to the Federal Reserve of 1913. This is the guy who also came up with QE. So I think that a nuanced view of Kevin Warsh is appropriate. But the market is just all over the place. And not so much even the stock market, but if you look at currencies, if you look at commodities, if you look at what gold and silver did last week, they really ran up very strongly into the nomination announcement from Trump. And then as soon as that happened, you kind of had the sell on the news event. So we had that parabolic move up, blow off top, and then gold and silver have just plummeted since then. Silver topped out at 120, over 120, and now it's below 80. Gold is down to $4,700 an ounce. I think it was close to 6,000. You had a bunch of banks raising targets to 6,000, 7,000. So that's just dramatically dropped, and it's kind of ironic because I think it basically topped out the day that we did the podcast on it. And the reason that we did the podcast kind of snippet on gold and silver was because we were hearing just a fever pitch from clients and from interested parties about should we be getting in gold. And it's not too dissimilar from what we heard on Bitcoin and a lot of the cryptocurrencies when that thing spiked to $125,000 per coin. I think that, like I said, Warsh is ultimately going to be, you need a nuanced approach. He is going to, change things, I think, probably more than the more sanguine people suggest in terms of how the Federal Reserve conducts its business. I don't know if that should directly be interpreted as if he's going to be more dovish or more hawkish. I do think that, and I think that probably over the near term, he believes that we need to cut interest rates. I think he's on the Scott Bessent line of thinking, and I think he's on the Stan Druckenmiller line of thinking. And I don't think he would get the job if he wasn't on the Donald Trump line of thinking, and that's for lower interest rates. Over the longer term, however, and I know we've talked about this before, since 2008, the Federal Reserve has seemed hell-bent on avoiding recessions at any cost and printing money and trying to blunt any downward move in the economy. I do not think that is what Kevin Warsh wants. I think Kevin Warsh understands that recessions are a natural functioning and ebbing and flowing of a healthy economic cycle. And I think that he views that recessions are necessary. And so when push comes to shove and he's actually in that situation, is he going to continue with that? I don't know. But I think at least right now, what we can say is that if we do go back to a Federal Reserve, the likes of which we had even under Greenspan, I don't think that saying the Federal Reserve is going to act at this first sign of trouble of a recession is any longer an operable thesis. I think that needs rethinking from a lot of the investment community.
Yeah, and I think there's two components at play here. One is I do think there's a psychological component. You mentioned people just really wrestling with how to interpret Warsh. I think there's a fair amount of itching for calamity from market participants. We've seen that on the consumer side. We've talked about the disconnect between what consumers are actually spending money on and how they feel about things. I think the same is true for the markets right now. I think there's people kind of hoping a little bit for a letdown. I think a lot of people were very, very convinced that tariffs were going to be a major negative a year ago, and as the data continues to print and come through, it turns out they're not. People don't like smoothness. The market, we often say at large, hates uncertainty. Market makers need it. And I think there's an element of people really leaning into this story or this unknown of Warsh and really heightening it. And the reality is I don't know that he's that big of an unknown, hard to quantify choice compared to anyone else.
I would agree with you. I mean, I certainly don't think he's easier than Rick Reeder, and you know, maybe Waller he's easier than or he's tougher than, but
in the scheme of
Yeah.
Fed chair appointees historically, it's not like, man, where'd this guy come from? Who
Right.
knows? I mean, he's worked there.
Yep. Notably, he was not a National Spelling Bee finalist, unlike Ben Bernanke, though. So I don't know.
Nobody's talking about that.
I would say just kind of one last thing on this is I do think the hope for calamity, I think, is very much there. We also see that on the fiscal side of the equation. A lot of people saying this deficit is blowing out beyond all proportion, and the deficit is down. It was down $400 billion in calendar 25, and you know, if you look at just receipts, deposits and withdrawals out of the Treasury operating account, and this is independent of any Treasury issuance, so this is just purely money in, money out. We actually have a surplus in the month of January, and we had a deficit last year. Deposits are up like 20%, and withdrawals are up like 2%. So, you know, I don't see where this big federal deficit is coming from. I wrote about that in the memo, but I think there's just some things where there's this narrative that's front running the data, and it's not synchronous.
I mean, using the sports analogy, we've all seen a college football team replace a quarterback that everyone loved with someone new, and it's real easy to look at that new quarterback and just nitpick every bad throw, every poor decision, and ignore the fact that, hey, the previous guy did the same things.
Yep.
Korean stocks getting pummeled.
Yeah,
I mean, along with it.
Yeah, a lot of I didn't realize they were so big in zinc. Korean zinc, one of the largest companies in the Kospi, which is their index, fell 11%, really because of like a lot of the silver. They also produce silver and gold as byproducts. So Korea zinc down 11%. You also had SK Hynix, the memory producer, and Samsung both down like 2 and 4% respectively, which doesn't sound like as much when you're talking about Korea zinc down 11%, but it's still significant. And I would just say, you know, I wouldn't read too much into this right now, but I do think that this global volatility as it relates to commodities continues, and I'm hoping that we're kind of on the backside of it. People don't really like to talk about it other than ask questions like, should I buy gold when it's going up? Mm-hmm. And then when everything's going down, it's, is this going to, manifest in other parts of the economy? And I think that just as you had gold and silver and natural gas prices really rip by themselves, I think that you're going to see them pull back by themselves as well.
Going to be a little more nuanced and isolated there.
Yep.
Government shutdown. I mean, it seems like we've got a path here to keeping this thing open. Everybody knows how much I love talking about that. But got a deal coming through that would keep DHS funded for 2 weeks while they figure things out, negotiate things. The rest of the government would be funded through September 30th.
As we talk through these, Andrew, because I'm with you that I think that this is kind of a sideshow right now, and really not market moving at all.
At all.
But as you think about kind of what's in the zeitgeist of people who are tangentially associated with financial markets, but maybe not living and breathing it day in, day out the way that we do. Of these kind of things, commodities getting hit, Warsh coming in, turmoil at the Fed, government shutdown. Are there any of these that, kind of bubble to the top in terms of concerns for people?
I think the government shutdown is probably higher on that list for the average, non-financial professional. I think it's probably higher on the list than it should be. It might be number one. And I think a lot of that is just the way we cover these things, especially right now. Traditionally, government shutdown, I think, whether you're a Republican, a Democrat, an independent, whatever you are, you kind of roll your eyes about why can't they be adults and figure this thing out. That is certainly the case here, but it's supercharged with a major narrative as it relates to the Department of Homeland Security, as it relates to ICE, as it relates to Border Patrol, all of these things. And so it's going to be very easy to package on a news broadcast or a 30-second news update on the radio, whatever it may be, in a way that seems digestible to the average person. And I don't want to sound like I'm talking down to anyone, but thankfully there's a lot of people that don't have to watch this stuff all day and cover it the way we do. We appreciate those people. Those people are why we have a job. But I think there's a lot of people out there where that will really resonate, probably more so than commodity pricing, probably more so than who is Kevin Warsh. I think that's the one that probably rises to the top. But as you said earlier, I think it has no bearing on the market. And frankly, very little bearing on the broader economy. There's a gap between what the economy is and what the market is, but I just don't see it as a real meaningful story.
Yeah, I would agree with you.
AI, we've got some news. Nvidia pulling out of the rumored OpenAI funding round. We talked about OpenAI a few times last week, and the harbinger of bad news that OpenAI funding deals have tended to be, at least as it relates to this particular quarter for earnings. Do you think Nvidia's pulling out, or were they never going in?
I think that they want to see a little bit more substance from OpenAI before they keep funding. They signed a LOI last September, and they said they intended to support OpenAI's development of more data centers, but they don't have to give it all at once, and they don't even have to give it. So it seems like Jensen Huang's trying to play it both sides, and I think that he's actually being fairly judicious in how he's allocating capital. So I think it's a point for Nvidia, and it's probably, and OpenAI's got to raise the capital from somewhere, because they're going to have to pay a lot of money over the next few years to Oracle, Microsoft.
And the circle really starts moving the wrong direction when you're Oracle and you're saying, okay, we're supposed to get a bunch of money from OpenAI. We need money to build the infrastructure that OpenAI needs.
Yeah.
So Oracle looking to raise $50 billion.
And some of that's going to be equity. So they're very committed to their investment grade rating. And if you need to raise $50 billion, you can't do that all on debt and expect to maintain your credit rating if you're a company the size of Oracle. And so they're going to have an at-the-money stock offering that they're going to execute over time, and it's going to be up to $20 billion. They're also going to have initial issuance of mandatory convertible preferred securities, which isn't going to be the bulk of the equity side, but is going to be a chunk. And then we're already seeing big announcements on their debt issuance this morning as they follow through with this. So it's crunch time for a lot of these AI companies, and I was anticipating that we'd have this more in the second half of the year, but it's coming sooner than I expected, because a lot of these data center investments are coming sooner than expected. And the question now is, with OpenAI and Anthropic IPOs expected in the second half of the year, does one of them try to bring it forward to get out ahead of this before the valuations really start to crack? And so I would expect, we've got potentially in the second half of the year, all of these lined up: OpenAI, Anthropic, and SpaceX. And SpaceX, you're already starting to see that be pulled forward.
Yeah, SpaceX is getting pulled forward. Musk is moving ahead. It's not a done deal, but moving ahead. So SpaceX last valuation, I think, was $800 billion, merging with XAI, which I think is around $200 billion. bringing those things together. I mean, it kind of makes sense when you think of the circular financing, for instance, with OpenAI. And then you think, okay, well, Elon Musk, through his companies, has a potential to just have closed-loop financing where you've got real cash generation that's going on from the SpaceX side, specifically with their ability to not only launch a bunch of rockets, which I think is what most people associate with it, but to provide satellite internet. They can print cash and fund the AI side internally. I think some people are jumping to conclusions with the idea that this is going to get us so much closer to having data centers in space and all of that. I mean, maybe that happens someday. I don't know. I mean, at this point, who am I to say it won't? But it just provides cash flow for the operation.
You need some space armor for that.
Yeah,
those data centers.
You're going to need space armor big time.
I'm very curious about that. I mean, I think if I was if I was an interested party in any of these entities, maybe with the exception of Tesla, I would say it would actually be kind of nice to have Elon Musk solely focused on the operations of one company, even if there are three sub-segments in terms of XAI and SpaceX and Tesla. The other thing, I think, with Tesla canning the Model S and the Model X, you're down to two models and a Cybertruck.
Yeah, at some point that ought to be like on autopilot.
Yeah, so hopefully, maybe they can, even Tesla, buy that, and their CapEx spending is getting crazy. I mean, that's about to double to $20 billion a year. So interesting times for Elon Musk.
Disney reporting earnings. Any big takeaways?
I was a little bit disappointed with the numbers. I thought that for a quarter in which they saw continued growth out of Disney Plus, continued to raise prices. They had Zootopia 2, which they've been talking about for the last decade, and had a new Avatar, which was supposed to be this big franchise that they acquired that would be massive. For a quarter that had all that, to be up 7% in entertainment seems a little bit weak for me. And they did comp over Moana 2 from the prior year, but I don't know. I think that Disney was pretty weak, and they guided to low single-digit operating income growth for the sports franchise.
Which is not great.
And they're replacing their CEO. So I think you got a lot of concerns there. When Iger came back, I think the stock spiked from like 90 to 110, and today it's still 110. Yeah. And it's been a lot of volatility. So it just really hasn't, his new tenure in charge has not really helped accrue to the benefit of the stock price.
Yep. Yeah, and you compare that with other turnarounds like we've seen at Starbucks, where it seems like they've found their footing. And yeah, you got the initial bump with Brian Niccol, but that's continued.
At least you're seeing progress.
You're seeing
change.
What you thought you would want to see. You're seeing same store sales growth and some movement there. All right, we'll wrap it up there. Busy week this week. We should have Tom back in the saddle. He's back today, but in a client meeting right now. We'll have Tom back, get his thoughts on the Fed, all that good stuff. I know it may just be a solo call with Tom Thursday morning, and then Friday I will probably not be on the call, but we'll be here every day this week. We appreciate you guys. Make sure you hit subscribe. And developing behind-the-scenes story. Ben is running a marathon in 12 days. Ben is a known marathoner. Super producer Hicks let Ben know that he has been recruited to run a marathon, and he's training for one, and he's doing it with, and I quote, his friends. Notably, Ben did not know about this. So we've got a little bit of a rift going on with the production staff and the talent that's on air. So definitely the time to be liking the videos, subscribing on YouTube, subscribing on the podcast feed, because I think this is only going to get frostier. We got 6 more weeks of winter, and I think this relationship is cold as ice right now. So we'll wrap it up there. We'll keep you posted on developments. Talk to you soon.